Welcome to Learn Accounting Finance. In the next 1.5 hours, you will learn the basics of accounting so that if you have zero knowledge of accounting, by the end of this video, you will be able to prepare financial statements such as balance sheet, income statement, and cash flow, as well as be able to explain how those financial statements are prepared and what is the meaning of each. If you are interested in an accounting career or finding a job in the field of accounting, I recommend that you watch this video till the end. Subscribe to my channel and like the video so that you can always come back to this video in case you need to refresh your memory. If you understand the basics I share in this video, you are pretty much ready to start a job as an accountant. Or maybe you already have a job as an accountant and you want to clarify the concepts in your day-to-day work. Go ahead, watch the video till the end and let me know if you found this information helpful, do you have any additional questions, and whether or not you find accounting boring or interesting. Let me know in the comments and let's get right into accounting.
Accounting is the language of business. Why is it called the language of business? Well, it records every business transaction. For example, if there is a buyer and a seller, let's say the seller sells a mobile phone to the buyer, this is a business transaction. And there are certain rules and methods to record this transaction in the books of the seller's business. Similarly, the buyer, if the buyer is also a business, they will record a transaction which records the buying or the purchase of the mobile phone. Accounting defines the rules, procedures, and principles to record those transactions in the books of the business. That's why it's also known as bookkeeping. Let's take a look at a few examples of business or financial transactions. A fast food restaurant purchases buns for $300. So they produce burgers and they purchase buns that make the burgers. Another example is the fast food restaurant pays $100 for electricity. It also buys a computer for $1,000. So these are three simple examples of business transaction. Note that all of them involve money, and as per the rules of accounting, there is a specific method to record these transactions. Each of these transactions will be recorded in the language of accounting. Every transaction in accounting will always have two consequences. This is one important thing to remember. All transactions have two consequences. In the language of accounting, we call them debit and credit. So one of them is debit. There's always a debit and there is always a credit in all accounting entries. There are no exceptions. Every transaction will always have a debit entry and a credit entry. So let's take a look. So the first example of purchasing of buns, how will we record it? Well, a non-accounting entry, which is also sometimes called single entry, will be, for example, cost of buns, $300. So if you're not an accountant and you are recording this transaction, you have this business, you would just be recording a single line showing the cost of buns. However, an accountant will record it as a double entry with debit and credit. And the entry will look something like debit buns inventory, which is an asset of $300, and credit cash paid, which is also an asset of $300. Note that there is a debit and a credit. The total of the amounts is exactly the same, so the debit always equals credit. And in this case, we have an increase in asset, which is inventory, and we also have a decrease in another asset, which is cash. We will discuss what are assets, liabilities, equity, income, and expenses in detail. The key in accounting is to start thinking about each transaction in terms of the two consequences or results. Each transaction results in either an increase or decrease in assets, liabilities, expenses, income, and equity. That's pretty much it in a nutshell. All of the transactions that an accountant will record related to a business will always impact one or more of these five categories, which are assets, liabilities, expenses, income, and equity. Now let's look at the second example, which was payment of the electricity bill. So again, a non-accountant will record a single line showing cost of electricity, $100. But an accountant will record as debit electricity, which is an expense, $100, and credit cash, because cash is paid out, so there is a decrease in cash, so credit $100 as well. The example of purchase of computer, very similar. Non-accounting entry, cost of computer $1,000, and accounting entry would be debit computer, which is an asset, so you now have an asset physically available in the business In accounting, we record that separately as an asset and then credit cash because cash was paid out. So whatever cash the business had at that point, there is a reduction of $1,000 and that is shown through the credit entry.